The first Reserve Bank today at its official Melbourne Cup meeting has left the cash rate on hold at 4.35%. Now, worryingly, for those households struggling that were hoping to see a rate cut, there seems to be little reprieve in sight, with the bank saying in a statement that reads, while headline inflation has declined, underlying inflation is more indicative of inflation momentum and remains too high. Joining me now for his analysis of the decision today, Judo Bank's economic advisor, Warren Hogan. Well, thanks for your time, Warren. What does this decision say to you today, coupled with that statement from the bank about underlying inflation? What's the state of economy and what's the likelihood that we might get a rate cut? That's the talk from some of your economist mates in February or March next year.
Yeah, good evening, Peter. Thanks for having me on the show. Look, I think the Reserve Bank today was pretty clear. In fact, they haven't changed their tune all that much. There's still inflation risk in this economy. Inflation is still running well above their target band, and we have to ignore the artificially impacted headline inflation and look at the core measure. And of course, it's still an open question whether or not it is going to return to target on a sustainable way. So what this all tells me is that there's very little chance of a rate cut anytime soon. It's certainly not actively being discussed. And February is only a few months away. It's not that far into the future. So I think that's a very low chance. And indeed, I think there is still a real risk that the next move in rates could be up. It might not be till May or even a bit later, but if rates move in the short term, I think there's more chance of a hike than a cut for the simple reason that inflation's running above target while unemployment is still low.
I made the point, and this is a political comment a little earlier with Andrew Clennell, but you know, comments the Prime Minister makes today to his backbench that I've got a big program of policy announcements to come, and let's assume we're talking an election, you know, somewhere from March to May. He also wants a February rate cut. So if he comes out with all of these big spending measures in December and January ahead of February, he's not going to get a cut, is he? That's the problem, is he's boxed himself in.
No. And the RBA in their statement, the bigger monetary policy statement today, has made it quite clear that one of the things that surprised them this year is just how much government spending is in this economy. And if you look at their forecasts, we've got government spending growing at 4% this year and 3% next. The private sector is going to barely grow at 1% this year, barely grow at 2% next. So, the government is what is putting that demand into the economy, which is, of course, keeping that upward pressure on inflation. So the RBA would be very worried about anything remotely resembling what we saw in Queensland before that election being replicated at the federal level. And, of course, we saw on the weekend this HEX announcement, although that's probably not that big an issue from short-term inflation, but it just shows you that they may be willing to spend, and that's not going to help get us anywhere near a rate cut.
And of course, it's not just the federal government we're talking about here in terms of spending. Which, you mentioned there the Queensland campaign. We're looking at the debt burden of the states. Look at Victoria, and it's still spending like drunken sailors down here. It's the state burden. But it's also the low-value spending, the recurrent spending, the spending where there's no economic impact. And when you look at employment, the growth in the public sector, well, all those workers have to be paid. When you compare it to the growth in the private sector, which is basically negligible, so you can see that the private sector is under real pressure. It's doing the heavy lifting on inflation. The government's putting fuel on the fire.
Yeah, no, that's exactly right. And there's a bigger structural issue at stake here. And that is that we're growing this government like we haven't seen since the late 60s or early 70s. It's at the biggest it's ever been as a share of the economy. Now, right now, the problem is that we are capacity constrained. We need to boost the supply of our economy, how many houses, how many skills, how much infrastructure we've got. And of course, in terms of the private sector, if they stop investing because they can't get hold of the right people because the government's hiring everyone, then that's going to jeopardise that future supply increase in the economy and add to our inflation and growth problems. So I think we're on the wrong path here with the mix of private public. And of course, we are not getting any productivity out of the public sector. It's going backwards, and private sector is really struggling on that front too. So we as a nation are going nowhere in terms of our standard of living. And that's, I think, our biggest challenge.
All right, we've talked about how tight the polls are politically. In economic terms, is one candidate better for the US economy, perhaps the global economy, out of the race that's going to occur in the next couple of hours? I mean, does the market have a preferred winner here?
Yeah, look, I think for markets and business, the big problem will be any uncertainty associated with the outcome, and of course anything that comes from that. So a clear winner, one way or the other, is in the first instance the most important thing. But I think in terms of the short-term economic outlook, you saw what happened in 2016. Trump really supercharged the economy. How sustainable that is a question. But of course, in the short term, that'll give the economy and probably markets a real kick. So, look, I think the issue is, though, just making sure we get a clear winner. That's what's going to be most important for investors.
And I think that's for quiet on the streets and just an acceptance of the result too. I think that's really important. Warren, thanks for your time. Great to have you on the show.